Ajay Joshi, who tracks the chemical space closely, chemical industry expert, really joins in right now with some thoughts around this. Ajay, good having you. Thank you for taking the time out. It's the first time that we are interacting. I'm Neeraj here. There's a lot of talk around how the curve might just stabilize in Q3 and we might see the first glimpses of fair degree of positivity in the results from the chemical/specialty chemical companies. I was hoping for the same. I was talking about it, but I've been wrong because largely the space has given disappointing numbers.
Yeah, good morning. Good morning, Neeraj. Yeah, I think it has not given the results that we were all expecting, but somehow the last quarter was better than the earlier quarters for the last 1.5 year. So somehow chemical sector has shown some resilience as compared to other sectors. And the current quarter also, just this morning only, I have gotten the export numbers also for the January month of these chemical companies, and they have shown again significant performance. So I think slowly we are reaching towards the end of this specialty chemical downturn, and I think this quarter will be better than last quarter. So definitely we are getting there. So you can expect some good action from chemical companies because right now Indian chemical companies are in a very safe positions as compared to the Canadian, Chinese, or even the Middle Eastern chemical companies with regard to exports to the US. So the Trump factor would also play out, which would be positive for Indian chemical companies. So we will see good quarter. Don't worry about that.
Okay, no, but the reason I started off that conversation with that question, Ajay, was to segue into now what can happen in terms of externalities as well, right? China plus one spoken about for long, leg one played out until 2021. Do we see leg two starting to come up because of this whole tariff conversation?
Yes, actually. See, US companies, US customers, US importers, they are all anticipating something big from Trump. And Trump's stance has been very against for countries where they have a trade surplus. This is not the case with India. So, the chemical customers, particularly in US, they have increased their sourcing from India more and more, particularly customers in the oil and gas segment, refrigerant gas segment, customers in agrochemical segment. And this has been evident also. If you look at UPL's result, for a couple of past years, Latin America used to be very big market for UPL, but now US has emerged out to be a very big market, particularly in the last quarter also, they have done good sales volumes in the US market. Similarly, our refrigerant gas companies, because China, they have tariffs, plus anyway, now Trump is cracking down illegal routes also where the Chinese suppliers have been selling refrigerant gas into the US market. So companies like SRF, Naveen, they have shown very good volumes last quarter also and Jan month also. So this quarter also they would show good volumes. Apart from that, even agrochemical companies, other agrochemical companies apart from UPL, which have US as a market, they would do well. Another very good sector, it is not the chemicals, but allied sector to chemicals, is the fertilizer sector. Canadian companies like, OCI, Nutrien, these are mega fertilizer companies, and now Canada has been slapped with 25% tariffs. What I'm hearing is that on fertilizer companies, particularly, Trump is going to announce 10 to 15% additional tariffs on the Canadian companies. So who becomes the supply source to the US? They cannot source from Israel, they cannot source from Canada, they cannot source from Russia. They are all in geopolitical issues. So the option for US customers becomes India. So even the fertilizer sector is going to benefit from this. Uh, Agro, fertilizer, refrigerant gas, oil and gas, chemical, these are a couple of sectors which
Right.
would
So, Ajay, a
benefited.
question on this one. Agreed that, we could be beneficiaries in terms of, higher tariffs on Canada. India could be a beneficiary. But when you talk about the reciprocal tariffs, organic chemicals, we have a trade deficit of around $2.4 billion. And this is 12-month trailing as of December 24. And to this, if you have to look at the higher, the differential in tariffs, India imposes higher average tariffs on US to the tune of almost 9.4% on chemicals. In this situation, plus the reciprocal part of it, how do you see the impact on Indian chemical companies and which will see an impact?
Okay. See, the reason for this is that because for the organic chemicals, which are the key raw materials for our downstream chemicals, India already has supply sources which are cheaper than US, that are Middle Eastern supply sources and Russia. So that is the reason India had slapped higher tariffs on the US companies. But this is actually one of the discussion agenda during the Prime Minister's visit because they are going to look at these tariffs chapter wise, whether it is chemicals or any other category. So India is definitely going to cut down on these tariffs, these import duties on certain chemicals getting imported from the US, which again would be good for Indian companies because they would be able to import the US organic chemicals at a cheaper price, which work as a raw material for our companies. So any decision towards tariff cut on imports from US would also be a welcome move for the Indian chemical sector actually.